Hello, 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 everyone. Mike Arnold here, co-founder, Pad Trading Partners, along with Bob Iacchino, who will be on shortly. We'll get right to Bob right off the bat. But before that, if you are new here, please consider subscribing, ringing the bell, and hitting that like button, especially since Bob is on, spending his Thursday afternoon of his super valuable time at 4:30 Eastern time, right before Good Friday, to come on to talk to you. So, and if you're a long time viewer, please. Sorry, Bob was chuckling in the background because I can hear his audio. You can't though yet until I hit the magic Bob button. Long term subscribers, please come back, leave some comments, and hit the like button. And with that, I will press the magic Bob button. Boom!
That was a lot.
Boom! That's the good.
Super valuable time. That was a lot.
That's the pre Good Friday intro. I practiced it all afternoon.
That was a good one. I liked it. That
It
was a
was
lot.
actually just off the top of my head.
Yeah, it was a lot.
Oh boy, let's see. Appropriate title as usual. That's the low liquidity sell off today. Hey Dan Jet, good afternoon. Hey Christoph, 4-day holiday weekend just started. Well, 3 days for us. We don't get Easter Monday off. It's a crime. It is a crime. I liked working when I was trading in Switzerland. Easter, like a whole bunch of stuff shut down for multiple days. It was fantastic. Super valuable time. W browser on with us. Bob wants to talk Ferrari. I don't know if Bob wants to talk Ferrari today. I think Bob wants to talk about some things like we had PPI yesterday. We had retail sales today. Uh, and I don't know what else Bob wants to talk about. So with that, I'm going to let Bob talk.
Well, PPI yesterday took away any of the good feelings that may have come from the CPI. They're gone. And it's gone.
And it's gone.
And it's gone. And you saw that by people don't realize this, but 30-year bonds, the yield reached the highest level since I believe May 2019.
Is that
Um,
let me
I went back and did a quick search, and that's the nearest I found on that yield
let me
was May 2019.
well, let's see
So
here.
I'm
April,
close.
May,
Yeah,
April. Yeah, May.
April, May 2019, somewhere around there.
Exactly. We're right. Yep. If I
Yeah.
draw my
So,
magic line across, you are correct.
mhm. So does anyone know what that means? If you think about what we've been talking about, what the lower yields meant, what do the higher yields mean? Well, they would theoretically mean the opposite, right? So if we're getting higher yields now, remember I said the lower yields mean either people believe that what the Fed's going to do is going to work against inflation, or they're betting on a slowdown. So now the higher yields would mean people don't believe that what the Fed is going to do is going to work, or they're betting on a stronger economy down the road, which will continue to drive inflation in one way or the other. I suspect it's the former and not the latter. I suspect people believe that the Fed is not going to be able to contain inflation, or they're not going to have the cojones to continue to do what they need to do to control inflation. And you're going to need higher yields in order to offset inflation. So if you sit in cash, you're dead, you're sunk. You can't make it with this level of inflation. So we talked about PPI. By the way, retail sales today, just okay. I didn't think it was great. We should
Yeah,
probably
but
talk
those aren't
about
inflation
that.
adjusted.
What's that?
Those aren't inflation adjusted. So
No, exactly. We talked about this last month, Mike, right? I don't know if we did it on here or between you and me. But retail sales, it's a dollar figure. So if
right.
inflation is driving good prices higher and retail sales go up, that may be mostly the price of those goods going up rather than the actual sales. So if you have 8% inflation, 7.9, whatever the last number was, I don't remember. It was at 8.5, I think. It was a
Yeah.
big number.
Yeah, it was.
And you get retail sales that come out, what the headline number was, 0.5%. They were expected at 0.6 month over month. Year over year retail sales, 6.9%. Last one was revised to 18.2%, was revised higher. So year over year, 6.9%, 8.5 inflation. It's not a simple mathematical equation that you say, okay, then retail sales were actually down, inflation adjusted, but it's pretty close. It's pretty close to that. There's a separation of the different reports of retail sales, and you would have to go through it and take a look at all the different prices of all the different products to figure it out. But it's pretty close to that consumers aren't spending, and we saw that in consumer spending. Now, the PPI figures, as we talked about, PPI came out much stronger than expected. The interesting part to me was the input PPI. Okay. Input PPI month over month was 5.2%. It was expected at 2.5%. Okay. So it was more than double the expectation. So what is input PPI? Well, if you click on that on the calendar Mike has, if you go down, you have the low level economic data, and you click on input PPI, Mike. There's a description of it. The input price measures the price of materials and fuels brought in. Okay. So materials and fuels brought in. So what does that mean? That means the entirety of PPI broken down into the components that go into the products minus labor or through the roof. Labor is also a portion of the headline PPI. So US PPI being very strong, 1.4% month over month, expected at 1.1. Year over year, 11.2%. 3-decade high. 3-decade high for producer prices. There's been a while on the different TV shows, especially on the TD Ameritrade online shows that I do, where I remember the guy would say to me, we got CPI today, we got PPI tomorrow, Bob, which one matters? And I'd say, don't even worry about PPI because CPI matters. If CPI is stronger, it'll matter. Well, now you actually do have to worry about PPI because we're waiting to see if CPI is going to weaken, and PPI would be a component of that. PPI didn't weaken. It strengthened, and it beat expectations by a lot. Core year over year, 9.2%. So it's ex-fuel and energy. Crazy. So inflation's still a massive, massive problem. And then the last thing I'll say is with Daniel Yergin from the EU said they're drafting legislation to ban energy, sanction energy from Russia. That's what the last second rally in oil and natural gas was. Do you guys think that's going to help inflation? Of course not. So things are terrible. That's all I got to say, minus questions.
Happy Easter, everyone. Things are terrible.
Happy Easter, everybody. Things are terrible. Well, yeah. But it's likely that plus the yield hike is what drove the sell-off today. The inflation,
there was low liquidity. The markets were surprisingly thin. I mean, they're generally a little thin, but not that they were thin. I mean, there wasn't much there. I mean, in the S&Ps and everything, there was not much market depth.
Yeah. So the crude oil move was late, by the way. That crude oil move up 2%. We were actually down earlier in crude. Like earlier on the day, we were lower. And we ended up the day, you might even call it post-market, given the way the CME does it. But 106 on WTI, 106.51 is where it's at right now. Up over 2%. So it's pretty ugly.
So yeah, that's the way it stands. Anything else you want to touch on before you wrap it up?
No. Anybody got any questions that don't involve Elon Musk and Twitter?
Funding secured.
Funding secured. Did you notice the price? 54.20.
Yep. And
I think 420 was a little nod to 420.
And next Wednesday's 420. And everything in the agreement is non-binding to it's literally the most non-binding hostile takeover attempt that I've ever seen.
A Bloomberg article just showed up in my inbox. I kind of can't wait to read it. It's called "Time for Plan B" was the headline.
Well, I mean, did you see his TED Talk today?
No, did he have one today?
Oh gosh, he's now he completely after the SEC again, violating his terms of the agreement again, saying they forced him into it, else he would have lost all his funding and everything else. He was railroaded and which he can't. It's specifically in the agreement he signed. He cannot say stuff like that. So it's gonna get so, but you know what? This stuff because over the last few days, and I've been talking about this for a couple weeks ago. I said bad news is going to drop because they've been ramping up DOJ investigations of Tesla and everything else. But now all the free speech people are like, now see, he's trying to buy Twitter. They're going after him. They're going to try to shut him down. The government's trying to cancel free speech. And then I'm like, guys, these investigations have been going on for months into stuff with Tesla.
It's a really good plan by him.
It
if you
is.
want to distract
But
and say,
now
no,
he's like,
after me.
everything that comes out now will be the government's trying to shut down free speech because Elon wants to buy Twitter instead. These investigations have been going on for months. They didn't just pop up yesterday when he said, I want to take over Twitter.
Right.
This was so stupid. I mean, I don't know what the SEC is going to do now because if they don't do something at this point, they should just disband it because there's no security laws then.
Shut it down.
Shut it down.
Shut the whole thing down. It's just silly.
I mean, if you're literally not going to enforce the agreement you already have, then shut it down.
Yep.
Because why waste our taxpayer money? Why go after just charades of, we're only going to go after the small guy for insider trading who made 50,000 versus all this other crap. I mean, he's going to have lawsuits already have been filed because of his late disclosure on Twitter. So the people who sold in that late disclosure window, it's good. It's going to get fascinating. And if they don't enforce some of this stuff, then why have the SEC? Let's just get rid of him.
Totally agree.
And stop worrying about it. There we go.
Totally agree.
With that, we'll all let you go for your long holiday weekend.
I've got a work meeting I can go to, unfortunately.
Yeah, there's no rest for the weary.
Is that a question for me or is it time for me to go?
Let's see. Elon needs to make all the incrimination info buried in Twitter DMs disappear. Yeah, he does. That's one of the things. I need to buy it to erase I want the edit button to erase everything I've done. That's not me because my Twitter profile. I mean, there's nothing out there that anybody could care about. But we'll see. As there. Quick question: in the inflationary times we're in and what's ahead, would it be better to be in physical gold or gold companies?
Not gold companies. And not that they're going to do poorly, but it's one of those things. It's like something I usually say about crude oil, Sterling, is, it's 100% correlated to the price of crude oil. So a lot of the times, one of the things I used to get mad about when I used to do a lot of CNBC is they would say to me, so Bob, you're bullish oil. So what oil companies are you looking at? I'd be like, none. I'm looking at actual oil because I'm bullish actual oil. So if you're bullish actual gold, I'm not saying the gold miners are going to do poorly. But what I'm saying is if you think gold's going to go higher, will gold turn around if there's like a gold company CEO scandal? Like, the guy starts dating an intern or has pictures on his computer that gets him in trouble, or CEO
or like
accounting
AMC
scandal.
buys a gold company.
Yeah, or there's some sort of accounting scandal or something. You don't have to worry about that when you buy like the futures or the physical or even an ETF that represents the physical. In the ETF side, we bought PHYS. That's the one we bought. But on the future side of things, there's now micro gold contracts. I would say that if you don't want to get into the ETF, that we've been in this since July, by the way, in the stock think tank. And from a perspective of the future, I think the futures is probably a better trade. But if you don't want to manage it, and they have micro gold now. So, but if you don't want to manage that, I would say that you're better off with
Yeah, because you're still gonna have to
PHYS.
if you're long term, you're still gonna have to roll contracts and everything else. So if you just want
Right.
to the simple play, I like PHYS because they actually own the physical.
Right.
That's why I like the Sprott stuff and the Sprott uranium, which I hope gets listed because they file paperwork for listing in this country. Otherwise, you have to trade on the TSX, the Toronto
Hmm.
Exchange. But there's another one, and that ties into the next question: is uranium long term hold? Yes, for me,
Yes.
it's
Yes.
it's volatile. It's volatile. Uh, and here's the one on the TSX. This is just a pullback again off the key harmonic, but you'll get volatility in this. But
Yeah,
yeah,
but
it's a
look at the
long term.
URA, Mike. Just look at the URA ETF that we're in the high
Yep.
beta plays in the stock think tank.
Yeah. See, it's
It's a
just
pretty solid chart.
yeah. And I'm playing this for a long term breakout. I mean,
Yeah.
you want to see. You're looking at recent history. It's like, oh, it's run up a lot. Then you get back. Look at this.
Right.
Could it? I'm not expecting it to here, but could it get even to 60 or 70 over the next year or two? Yeah. So that's
I
where you got
like
to put it in perspective. This is a long term play. And as I've talked about that on this channel, this is something like gold. I like to trade around a core position because then you can harvest the volatility until you get that major breakout play.
right.
So, oh, one more. Can we get Bob's take on CAG? Which is Con Agra. I'm watching for a pullback in it. We talked about this morning. Then a pullback or consolidation, then a pop higher. You have any thoughts on Con Agra with the with agriculture and strength and ag?
So, so I like the company itself. If you're trying to play ags and you don't want to go into the actual agricultural futures, which again, I think that's better, but they don't have as many of the micro contracts. ConAgra is your play. They have a quarterly dividend now. So they're paying that quarterly dividend. So that's not a bad thing. That announcement came out, well, I think it was earlier today. The quarterly dividend is going to be 31 and a quarter cents per share for common stock.
It's a decent dividend yield. You can see right
Yeah.
above Bob's head. I have it. Look at that, right above your head. 3.51 yield.
Right. So it's a good dividend yield. They're a good solid company. They make money. So I like it. If the chart looks good, I like the hold a lot. I think the agricultural thing is going to take 2 years to get back under control, given that we're about to enter the planting season over there. And Christoph, you can correct me if I'm wrong, but it doesn't look good that they're going to be able to get anything in the ground anytime soon. So I like it. I like the stock itself, and as long as the chart looks good, I'm
Yeah,
in.
and here, look at this. Look at the U.S. winter wheat stuff. This is from like 2 days ago, but red is not good. Let's put it
Right.
that way. And look at this is US and look at the amount in red.
Mhm.
Not good. Okay, so there's going to be, and that's again from a couple days ago, but that's just longer term. And there could be the same stuff happening with corn and beans as the spring planting season continues to unfold. And if we get more bad weather and more flooding or anything else, you could see already continued pressure on what is an upward pressure. I mean, we pulled back a bit, but this is so we have a triggered double bottom in here. You have soybeans coming back to their recent high area, and corn just broke out.
Yep.
Corn just broke out, and I'm gonna watch corn because that could really go. We could see 840, 850 price before we know it. So yeah, longer term, and this isn't something that's going to go away quickly. Now we can have volatility in this, but it's not. A lot of commodities are going to be in longer term trends. I think we're in a big commodity super cycle.
Yeah. Our Bob just basically um, broke through what would have been a potential down trade at 290. It just ran away from that. Our Bob, which is gasoline futures. Um, that's breaking out up. Rich B's comments that crude oil is breaking out of a descending triangle. I have that triangle drawn, but just as the upper trend line. And that's breaking out as well. I talked about that on TD Ameritrade a little while ago. So, about a year and a half ago, I don't know if you guys have ever seen my Bloomberg quick take things that I do on Twitter. I record the audio for it, and then Bloomberg puts images behind it and puts it up on Twitter. And about a year and a half ago, I probably did 3 or 4 of those on whether we're in a commodity super cycle. What's this? Also worried about how Ukraine gets it out because Black Sea ports are not an option. Okay, there you go. Anyway, I put this out. The commodity super cycle has 3 characteristics. Breakout highs in the commodities. All the commodities have to participate, and it needs to run over 8 years. And I think if you look, we're probably 2 or 3 years into what I think is another commodity super cycle. And when you consider the agricultural side taking 2 years to recover, it definitely gets you excited about commodity participation in general, but doesn't make you confident that the Fed can control this.
I mean, if you look at it, here's the Goldman Sachs, and it started, really moving up. And even if you waited till it broke out above the 2020 highs, that's just February 21. So from those breakout, we're only just over a year into it.
Yeah.
If you go from the lows, we're 2 years into it.
Right.
So could that run pretty heavy? Yeah.
So anyway, all right, I'm going to let you guys finish up. Have a good long weekend. I'll see you guys on Tuesday.
All right. Thank you.
Cheers, guys.
Okay. Small Mike is back. There we go. Let's just see. Remember 1 million monthly Sun Crusher nowhere close to back online. This is huge issue for veg oils. Yeah, there's so many components to this. It's ridiculous. We'll have to get to them next week. Ask him that on Sashi. Ask him that on Tuesday. Let's see what else. So I got uranium. Will selling continue into earnings next week? I take today sort of with a grain of salt because the liquidity was so low. It shocked me. It was shocking how bad the breadth was. Okay, so I'm not judging stuff off today that we almost had an outside reversal day in the S&P. We did have an outside reversal day in the NASDAQ, but it's going to be interesting with Monday. Now, Mondays, again, is going to be probably a little thinner in the morning. I'm not judging the whole earnings season based off of the early stuff, but it's going to be based off of, Bob's talked about before, forward guidance. And if forward guidance does stink, there'll be some downward pressure from it. But the next couple weeks are going to be very telling in earnings season. With that, let's just see. There's not much I want to go over. I mean, we had Tesla inside day today. It's going to get interesting. This stuff also with Elon, there's going to be shakeouts with Tesla. That's why I warn everybody. There could be some bombshells dropping, and it's not going to even be related to the Twitter stuff with Elon and Tesla. And there's been months of investigation going on with this. So if you're a long-term holder, just be careful, because you could see some interesting news come out. I think this Twitter stuff is going to also try to distract. Like, I've already seen stuff where people are saying, they're now going after him with Tesla because he's trying to buy Twitter. This stuff's been going on for months. A DOJ doesn't just open an investigation based off of because Elon's trying to buy Twitter like the day after. It's absolutely ludicrous, because this stuff's I've been talking about this for a while now. So just be careful and know where your stops are with everything. Twitter, by the way, I had something else to talk about. I actually have something else, then we will wrap it up, and then I'll do more stuff on Sunday. people again who follow got the stuff here with, all right, the gap fill play, and this is another little pet peeve of mine. And this is not related to Elon or anything else. This is just price action. So you got the close below the 62 and a half. So I get reach out, close below the 62 and a half, and I got stopped out. I'm like, well, how'd you get stopped out? Because I've said before, the only stop has to be above the high, and the answer was, well, that I thought that was too far away, so I literally put it at the next harmonic higher, 47.17. I'm like, you're trying to literally call in a with the news going around and hostile takeover play, fine. It favors the statistically. I have no problem getting short here or playing puts or something else, but you can't put a stop one harmonic away when the only thing that invalidates the play would be a new high on that same day. And the conversation was, well, it stops too far because I'd have to trade smaller size. And I'm like, exactly. If your stop goes farther away, you decrease your size. And they're like, well, I don't want to do that. Well, then you're trying to pin. Here's why I think, especially day traders, here's what generally kills them. They try to be so precise that they end up costing themselves a ton of money. You need to use realistic stops. It's also why I say on a closing basis stops, And people are like, well, I don't want to take that risk with waiting for a close. But that's what really, how many times do you see like this move? Just look at this. Look at this bar. Open, let's just go over this bar. Open 45.72. The high was 46.87. The low was 45.32 and the close was 45.92. You take open to close, that's the bar, but look at the range of it. You get so much, especially on story stocks or everything else. You got to use realistic stops, and you got to do them based off probabilities or the way it's, or skip the trade. But don't just say, I want to trade so heavy I have to use a tight stop, because then you have to be so exactly precise and try to, that level of precision, especially on stuff with news coming out, is absolutely ludicrous. And most people can't be that precise consistently. So use realistic stops and lower your position size. Please. I can't get this through people's head. They just want to trade heavy. They're still in this, everything just goes up. I got to go all in on whether it's with AMC, GameStop, Tesla. I got to go all in. I got to use 50% of my account on every trade, which is, you can get away with it for a while, but not in these markets and not on stuff that's whipsawing around. And the gap did fill. The stats played out. But you got to be able to take a little move against it, especially with stuff going on. So I just wanted to put that out there, because please don't be so specific. You can't use super tight. You shouldn't use super tight stops. You have to use realistic stops. Please think about that this weekend with your trading, especially with newer people. Because again, trade smaller and use appropriate stops. Because if it doesn't help you if you get stopped out 5 times in a row, if your trade would have been right, but you had a tight stop. You're just flushing money away. All right, so Elon Musk needs to be banned from using all kind of social media. Well, you think he'd ban himself from Twitter? I mean, this is such a joke. But it's going to be, may we live in interesting trading times. It's going to be interesting. This saga is not going away. Not only we got everything, and it's just going to be interesting in the next few weeks and the coming months. With Elon, without Elon, with everything else that's going on, the markets are going to be super interesting. So we'll do more review on Sunday afternoon if anybody can join me. If you can't join me on Sunday afternoon because it's Easter Sunday, that's fine. Just watch the replay, and I will do an open on Easter Monday. Then the holiday for a lot of like Europe, which I used to love living over there. We don't get it off here, so we will be back in the saddle. Sure. Hold on. What will I check ETH? Thinking of closing my account, it will go to 2,800, but I'm thinking crypto won't go down that much, and again, we'll probably have lower liquidity, and crypto can get pushed around. Thinking of closing your account or go to closing your position with we have this potential double, but if it breaks below 29.50, we could see, again, we're holding this key support level. If it starts breaking down here, we could easily retest the lows. The only thing now that would be my bullish signal is this is a potential little double. Even with this little hitch, it's a potential double. So that's the only thing that's bullish. And you see this double failed after hitting the first target. So crypto is getting very weak. So at this point, there's not much. There's another mini double, but crypto's weak. And if it does break below, like at Bitcoin 39.2, we could easily see back to 37. Ethereum breaking below 29.50. You got a little support shelf about 28.25, but below there, you don't have any support back to 2,500. Sure, I can check the euro. What you want? Euro, US dollar. I take it. Rich. Look at that. Look at that bar right there. Look at that bar right there. Euro, US dollar back to rotation zone. Trying to build a base in here. Trying to build a base, so we'll have to see. Right now, look at that with that significant level we already on there. 108.94, so 109 is still the key level on a closing basis. Let's just see if there's anything else. Little divergence, but we need. I just want to check out the lower price. A little breakdown, then snapback. There's no great bottoming pattern here yet for me, but if it does get above 109, it would be probably a short-term little long. You got the rotation zone in the way. So there's not a lot of great setups yet here. You also, John, have a great holiday weekend. Thank you for being here. Yeah, close your position. That's what I figured. I doubt you close your account. HUM. You want, is that you're saying or you want me to look at Humana? Humana's interesting. Again, another healthcare stock. Looking a little toppy with this divergence, but keeps bumping up against this major resistance area. Now, if it ever does break above about 472, it's a really interesting play. At this point, though, your key support is coming in. That is a potential double, but it's only a short-term pullback double. And you got major support about 446. You got divergences setting up. This is still a long-term play unless it breaks down below about 410. Wouldn't be chasing it here. I'd be watching for that pullback for this bottom to hold without triggering that little double and then a push up higher. The challenge here is if you're just trying to get recently long, I wouldn't be looking for a recent play up here. I'd be looking for a more recent play down here because I can use a more reasonable stop for another push higher and then a potential breakout play. It's not been able to break out even with multiple attempts up here from softening it. That's why I'd need to get in a better position versus up here, or I'd be waiting for the breakout and then the retest. The stock chart looks like heartbeats. Sort of does. Sort of does. I'm waiting for the flush. That's you get this thing is volatile, so I'd be waiting. Yes, I wouldn't be chasing it up here. I'd be waiting for at least a bigger pullback here. I don't know if you're going to get in this environment. I don't know if you're going to get a flush below 410 unless when are earnings the 27th, unless they really butcher earnings. I don't think you'll get the flush. I think you'll get a pullback, but not you're not going to get it down here unless something terrible happens with earnings. So, all right. You are welcome, Jake. With that, I'm going to let everybody get their long weekend started. Hopefully, you do have tomorrow off. I know I'll be doing some work still, but we won't have the markets open. If you have your regular day job, I wish you had it off too, but I hope you still have a wonderful weekend. Again, if you can tune in Sunday with me, I'd love to see you here. Until then, tomorrow markets are closed for Good Friday, pretty much. So there's not much going on. So there's not much for me to do. The futures, their stuff's pretty much closed. I'd have to double check, but I think the CME is completely closed for Good Friday. So there's nothing I'm doing. And the stocks are closed and a bunch of the stuff's closed. So there's nothing I was looking at. You're welcome, Ted. So nothing going on tomorrow. You'll just have to turn in on Sunday. Sashi, can you tune in on Sunday for MCK? Can we do that on Sunday? Little double top there. Just that's the only thing. So there you go. But if you want a more thorough analysis, we'd have to do that Sunday, and that is completely valid. And that's very overextended. Look at how overextended this is. So I'd be watching for the bigger pullback. This is not an area I'd look to get long. All right. There's your little quick analysis, and then we can do more in depth on Sunday if you want. With that, I'm going to wrap it up. Everyone have a wonderful weekend. A very happy Easter for those who celebrate it. Have a nice time with your family. And again, I will be back in a couple days. And I'll be doing also a stock sector analysis, so make sure you tune in for that. I don't know whether I'll release that. I might even do it tomorrow. So just watch the channel. That's why you ring the bell so you know when that goes up so you can start. If you have some free time, watch that. If you haven't already watched Futures, the podcast, new podcast, episode 1 and 2, it's on the channel, and we'll talk